Given that the narrative of crypto, blockchain, and DLT is moving towards Web3, and there's always been a good reason that we're called Web3 Labs, we're still going to be putting out our Blockchain Innovators podcast, but this is going to be now known as Web3 Innovators because I think it's a lot more appropriate now. People know what Web3 is, and that's where the narrative's going.
So guys, we're going to go into a little interview session with me and Conor now with some questions that I've dreamt up. Conor and I have been friends for many years. We met at the investment bank, UBS, about 15 years ago, where Conor was responsible for the software that managed all the trading links with the stock exchanges. It was a really challenging technical environment with very high transaction volumes, very high resiliency requirements and zero tolerance for downtime. Really an excellent grounding for what was to come. And it got me thinking, Conor, you spent your first decade in work in and around the financial markets, and that crossed the time of the financial crisis. So were there any big takeaways for you with that?
It's funny, actually, when you asked this question the second time round after the book launch, and you've had more time to kind of think about it as well. And I think there's one thing that's like really, really key about that experience that does actually quite nicely map over to blockchains and DLT. Back in the early 2000s, it was considered back then within the banking arena and finance arena almost an arms race between different firms trying to build out the best technology, because they found that if they could build the best technology, they'd have an edge over their competitors. But what's fascinating at that point in time was that you didn't have the regulation. You had the regulation for the markets, but you didn't have regulation around these electronic trading systems. And so because this was a time where you were going from having traders using keyboards to input trades, and people still obviously do this in some contexts for some markets, but this was then converted into code and running as algorithms that automated a lot of jobs away within the financial markets. And so hence even pre and post GFC, you saw flash crashes and these sorts of things. And this kind of world of the trading was what ultimately became high frequency and ultra high frequency trading. But in its genesis, it was very much so technology driven, and it was all about just writing the best code and software. And there's actually parallels with respect to where we are right now with wider adoption of blockchain and cryptocurrency technology, in that yes, you do have regulation in many jurisdictions, but of course the US being the most significant market in terms of crypto and blockchain technology anyway, because of course China's focusing on it in terms of more from centralized deployment. But we know that regulation is going to come, and what we saw happen in the financial markets there was that ultimately it got to a point where if you had outages with your systems, you have to now send reports to regulators. So it's nothing like as dynamic as it once was in the early 2000s. And it's kind of funny to see that the 15 almost 20 years later, where although blockchain, I see it as being a more significant technology just because of the broader implications of it. I think there's some really nice parallels there.
Yeah, it's a really good point. Yeah. Okay. So let's move forward a few years. In 2012, you moved to Sydney, Australia. Probably more of a beach opportunity than a career opportunity, but you did continue working with one of the big banks in Australia for a couple of years before moving to deliver the tech stack for a couple of financial startups. But at about the same time in 2014, we know that Ethereum was founded. Clearly, you were really interested in the technology from the beginning. I think you were mining Ether. So could you tell us how you first got into blockchain, and more specifically Ethereum?
With respect to the move to Australia, there was certainly a part of me at that point in my life that's liked the idea of living by the sea and being able to surf every day. So it was a fun itch that I got to scratch. But then I came to the realization that there's more to life anyway than just surfing and living by the beach, but you can still get a lot of fulfillment from it. But yeah, to tie it back to the work side of it, whilst working at ANZ, I built out their OTC derivatives reporting platform. So this was off the back of the global financial crisis. You had the regulation coming into place from all the major regulators because you had these derivatives contracts that people really didn't have visibility of in the OTC markets that were really the creators of the financial crisis. And so so much regulation came in. The Dodd-Frank Act was kind of the pivotal piece coming from the US, and so these trades had to be reported depending on what assets were covered with them to the CFTC and the SEC, and this was all going via the Depository Trust and Clearing Corporation, which is responsible for settling large numbers of the world's derivative transactions. So you had that reporting, but then you had other jurisdictions coming into place as well. So you had like the JFSA, the Japanese financial services regulator. You had the Singaporean one, its name escapes me. You had ESMA, I think, that was representing the US. And so it was just kind of this kind of almost like domino rally of like regulator after regulator instilling this, and these platforms are very important for the banks there. So it was fascinating to see that world, because it was the other side of the financial markets. In that, with the trading side, it was all about how fast can we make this stuff work, all very commoditized instruments, exchange listed stocks, equities, and exchange listed derivatives, whereas this world was kind of more like a world of legal contracts between different banks and you've got these large volumes of data there. So it was very good for seeing sort of both sides of the market, so to speak. But yeah, I'd had itchy feet for a number of years with that. I think especially because the way in which the regulatory climate changed following the GFC, it wasn't as much fun as a technologist, working within these large financial institutions, because there was a lot more red tape. And as most technologists, feel, it's nice. Change is the thing that technologists enjoy. You're writing code, you get something written, you put it out there, you move on to the next thing. Of course, if there's bugs, you need to fix it and address it. But it's kind of exciting that. And when there's almost nothing worse for technical folk as having to do something and then not be able to do anything with it and have to wait for politics to kind of figure out when it should actually go out there. And it's like the whole Facebook mantra around move fast and break things, which didn't really work out so well for them. But I think the essence of it is that technologists like to be able to create things and see the outcome of those things sooner rather than later, because if you leave it too long, you always forget what work you've done. And so that kind of set me on this journey working with startups, and worked for a home loans company where we're trying to launch a new type of mortgage in the Australian market, where we in effect would have been, we needed basically a pot of money that would sit on top of a bank's balance sheet, which isn't the easiest ask to get over the line, especially when you're a small little startup. And so we pivoted from there. But I got into this thing I'd come across called Ethereum back then. And so this was in 2016. So I wasn't one of those people who was there right at the very beginning, but certainly, I guess by most people's standards, still relatively early. The Ethereum network had launched in 2015. Yeah, I'd heard all the hype around blockchain, and I thought, yeah, this sounds like a fun thing to get involved in. I started digging beneath the surface. And when I came across Ethereum, it reminded me a lot of Linux. In the late 90s and early 2000s, I've been a big fan of Unix and Linux and getting really involved in the open source communities there. And I saw there was parallels there with Ethereum because it had such a strong sense of community. And so I decided to build a mining rig first of all, just because it was like a fun, hardware project to do. But I built computers in the past, and so it was just actually getting the steel to put the case together and put some graphics cards there, and have something in your house that's sucking in like 1,000 watts of electricity day in, day out, making a room too hot. But it was fun, right? But then I went having spent all these years working at these large financial institutions. There's been a lot of work on the Java virtual machine. Most of modern finance has been built on top of that technology stack. And I started looking at, well, if you're one of these Java developers, how do you work with Ethereum? and it wasn't easy. And so that sort of became my next big focus, was to make that task a bit easier. And that was the genesis of this library, Web3J.
Yeah, that's fantastic. Yeah, I mean, talking about that library, I mean, in 2017, you moved back to London, got married, started a family, but you still had time to develop and maintain this fantastic library, the last mile of connectivity for Android and Java developers at the time. I think it's expanded a bit now. Who wanted to connect with Ethereum. I just staggered by the numbers. Your libraries have been downloaded over 1 million times. They get downloaded tens of thousands of times a week by programmers all over the world interested in working with Ethereum. How on earth did they become so popular? And what really sort of drove you to write them and continue to maintain them?
So with Web3J, it was written very much so because there was a clear need for it. And I'd wanted, I'd liked the idea for a while to actually create an open source library. And again, this kind of stems back to my interest in the open source movements around things like Open Solaris and Linux as well. When I did some digging around Ethereum, there just wasn't a library for Java developers to easily integrate with Ethereum. You had Java software to represent Ethereum nodes, but that point of taking like a Java application to talk to an Ethereum node or deploy smart contracts on the network or read from them, it just didn't exist. And so that was why I created Web3J there, and invested a lot of time too in doing things like ensuring there was quality documentation, finding ways just to get it out there a bit more. So I think there's a talk that I did back in 2016 or 2017 that's had, like, I don't know, last time I checked, like 50,000 odd views about Java. It's called Java and the Blockchain, and had an article on it published in Oracle's Java magazine, and would be posting updates about what's happening in Reddit and blog posts. And so you're just kind of doing what you can to build awareness around it. I think nowadays I'd probably have started a Web3J podcast, but that was, this was going back a few years.
Yeah, that's a good point. Actually, it leads us on to the next question, really. I mean, you spent most of 2017 and 2018 building your new business. So back in London, you'd launched blk.io, which I remember you telling me was pronounced block.io, wasn't it? Yes, yeah. Which has now turned into Web3 Labs. Personally, you've been central to the enterprise Ethereum community since its inception, but Web3 Labs has built some really impressive clients. Microsoft, Consensys, and JP Morgan on the books. Just to expand a little bit more, you've got these libraries, they're the sort of foundations of your company. Can you help us understand what is Web3 Labs?
Yeah, so Web3 Labs, it started off as an organization to support the development of Web3J. And really it was, as we went on this journey of working with different companies and clients, we've focused on building out products and services to support them with what they do. And so with Web3J, we continue to maintain and support it, and also provide training and support services for it. And then as well, we created the Epirus Blockchain Explorer, which we've always found so many organizations wanted visualization for their blockchains, but there wasn't really anything available there. And so we have that. And but then we've been doing a lot of services work too. And mainly the reason here is it's that classic thing around, during the gold rush, it was the people that were making the tools were the ones who kind of survived and had the longevity there, and that's kind of what it's about here. It's not about trying to get something out there really quickly. It's more about going along for the ride and strapping in properly and finding ways that we can deliver genuine value to the overall ecosystem. We're still in the very early days of Web3, so to speak. We all know it's going to be very transformative, but we want to ensure that as a business we're impactful in ways that have sustainable impact. So it's not that things get created and then a year later they're gone. We want to ensure that we continue to build on the foundations, and over time it compounds, and that as the industry grows, we grow with it.
Very interesting. So in 2021, you've decided to write a book. So what did you set out to achieve with the Blockchain Innovators Handbook?
Really, the intent behind it was just to share knowledge. It was having been living and breathing this technology day in, day out for the last 5 years, and also having spent the 10 years basically before that working in large corporates and understanding their agendas too, I wanted to combine the two and actually provide something that leaders and people who have the ability to, I guess, look at their own businesses and reflect on, where some of the big challenges are, and give them really a framework with respect to how they can use Web3 technologies like blockchain and the things that have come off the back of it, like DeFi, NFTs, and so on, a decentralized identity, and so on. And you use that as a way to, well, to solve problems within their businesses, but also to find new business opportunities. So it's like with when the internet came along in its different iterations with Web 1.0, people hadn't really figured out business models around it other than just serving up information. And then with Web 2, you had this idea of the read-write web, where people were able to create interactive services. Social networks were a massive part of that, but of course Google as well there. And then with Web 3, you have this ownership and governance angle to it as well. So it's it really is a big increment. It's far more than an incremental improvement on what you have with Web 2. It's just completely rewrites what's possible with respect to business models. And so the intent behind the book was really to impart my knowledge in terms of what's got me to where I am, but also provide practical steps for people to actually go on a journey, so to speak, with Web3 technology.
Oh, fantastic. Well, I think that's a great segue really for us to see if anyone on the call has any questions they'd like to ask Conor.
I'll go ahead. My name is Sonal, and I've worked with Conor, or heard of him on the baseline side. I'm with Consensys Mesh. But I haven't gotten a chance to read the book yet. It just came in the mail yesterday. But I wanted to ask what it was like writing the book. I know there's a lack of quality resources in the space, and a lot of people don't have the time or knowledge to actually step forward and provide those resources to people. So you're clearly a very busy person. You have a lot going on. So I was wondering how and why you were able to write the book and provide it to us.
Thanks, Sonal. So in terms of the approach to it, the first thing that I found completely game-changing from my own experience was reading Stephen King's On Writing, which is kind of semi-autobiographical. It's really a book where he is describing how he became a writer and his approach to the writing process. And while someone like him is churning out 2,000 words a day every day, that's his job, and he's been doing it for years. I think the point was that when it comes to writing, what you need to do is, rather than, and this is how historically I'd always approached it, was you write something and then you go back and edit it and refine it, and then you find that you spend quite a lot of time on be it like a blog post or just some sort of post there. And what he really lays out is that when you're writing, you just need to be getting what's in your head on page, and don't review it or try and edit it then and there. You just externalize what's in your head and just keep doing that every day until you've got, and then in my case, it was till I had 30,000 words written. And then once I'd got to that milestone, that was the first time I went back through it and read what I'd been writing. And I think that's absolutely critical, because it's so easy, naturally, so many of us, especially when you're thinking about something like a book, is that you want everything to be as perfect as you can make it. But if with that perfection, it can be a huge stumbling block to actually getting it done. And also procrastination can come into it and so on, or you can find yourself wanting to cross-reference things. And so it was that approach of just making myself just write the words every day until I hit that milestone of 30,000 words. I had planned out an overall structure for the book beforehand, so I'd spent time thinking in terms of how many chapters is this going to be. It's going to be in 3 parts. These are the different chapter headings. These are subject headings within it. So the key thing there was that when it came to writing each day, I wouldn't be there thinking, what shall I write about today? It would be, here's something I need to write about. Let's just, I'm going to write this many words about it. Then if I covered all of that, then I'd move on to the next thing. So you're never trying to figure out, the topic you're trying to cover because you've planned out a rough structure, but then it's just about getting the words there. And so that was kind of the approach. And it was just about, in my own case, I had just had to ring fence time every day in order to do it until I got there. And then it was working with, I was fortunate to have, there was a number of people who volunteered to be my beta readers, who I, after I'd done a couple of iterations of the manuscript, sent it to them for feedback. So this included Alex here, but also shout outs to Mo and Christian from Web3 Labs too, and another friend of mine, Harry, as well. And so there was, and then Mariana too, who's from ING too. I thank all these people in the book, of course, but they gave really useful feedback about it, which helped me then refine it and helped it sort of come together as a book. And so that was kind of the approach and how I went about it.
It's a great question, Sonal. Thanks for that. Does anybody else have any questions for Conor?
Hi, Conor. I'd love to know, where do you see the biggest opportunity for all of this technology? Like, who are the people who should be looking at this right now?
Yes, it's great to see you, Laura, as well. I think the thing is, like with the internet itself, there's so many ways in which it's impacted society. And so with Web3 technology, I think there's kind of two very different ways in which it can impact the world. One of these is in those parts of the world which have less stable monetary systems, or they have problems like hyperinflation and so on, because typically in those regions the US dollar is the nearest thing they end up having to a stable currency, but it can be physically very hard to actually get hold of, because it's not like people can just go to a bank account and deposit US dollars in these places. Whereas with cryptocurrencies, all you need access to is a digital wallet. And then you have the ability to have digital versions of US dollars, which aren't controlled by the US government. And there's regulations likely to come in that might make it a bit harder for the companies producing that, but it's still, they're not something that are likely to go away. So that's an incredible resource for these sorts of places.
I was going to say, and what about like that's like, it sounds amazing and is doing so much good. Personal interest, obviously I work with a lot of financial brands in the UK. Like, what do they need to know about this, and why do I need to tell them that they need to read this book? So
in terms of within the financial arena, there's a number of places where it's already having impact. One of them is central bank digital currencies, and you can think about that in terms of right now with money, when it's issued, you have a central bank like the Bank of England that controls the supply of pounds. And what they do is they empower some of the largest banks, what are considered regulated financial institutions, to be able to, in effect, distribute that money to people. So when you go to a bank and take out a loan, they're not necessarily creating, they don't have the cash reserves to back all of that up. They have a certain proportion, but what you have in that world is, you have basically money that's being transferred between these regulated financial institutions and central banks. And when things like quantitative easing happening, there's all these systems that need to talk to one another. And so where we're seeing a lot of traction here is around putting that onto a blockchain. And these are blockchains that work using the same technology as the Ethereum network, but it's private and it's kind of ring fenced by these banks. And this is something that it's just a question of when it actually takes over, because it's far more efficient than what you have right now. So that's one area. You also have it with respect to settlement of financial assets as well. Anything that goes through an intermediary right now with blockchain, you can do it programmatically and remove the need for that intermediary too. Okay. And so it's kind of it's all about where you shine the spotlight, so to speak.
Could it like work for mortgages and stuff? Where the mortgage has to go to a certain place and then it You know, when you buy a house and all of those sorts of things, could it work with that for a swifter transaction?
Yeah. There's a few areas. One is land registry and title deeds, for instance. That's if you have a master record, so to speak, on a blockchain. There, it makes life a lot easier when you're sort of going between solicitors and banks and all this sort of stuff. But then you actually have the mortgage products themselves, because in the securitization markets, of course, you have banks that will take bundles of mortgages and create certain types of security that have known to be toxic in the past, but it all depends on exactly what sort of mortgages they are. But the point is, though, as long as you have the right risk controls in place, but also the sort of transparency that blockchain provides as well, can actually make it a lot easier to actually see what's happening within these systems, because it's not that you have on this bank, they've got a database somewhere which is storing some information, and then this bank over here's got their view, and they're slightly different views. With a blockchain, that key state or transaction information lives in a place where there's one golden source of it, and that's absolutely key here, and why it is so powerful.
Fantastic. Thanks for your question, Laura. Conor, I might just read one of the questions that's come in here from Milan. It sounds like Milan is a Java developer, certainly for some of the time, and he's asking, how different, if at all, is blockchain development with the Web3J library from building APIs with Spring, for example? And do use cases include working on the Web3 library development or applying it to fulfill the needs of the clients?
So where blockchain differs, you with traditional developments, there's you kind of think in terms of things of you maybe have a storage layer, and then you have a layer which is serving up data and might make APIs available, for instance. Whereas blockchain kind of has those pieces, but then it also adds in distributed systems and cryptography. And so it's the addition of those which I guess make it a bit more complex and increase the learning curve, because blockchain it's cryptography that's one of the key building blocks of it. And so in order to actually understand it, you need to have an appreciation of certain cryptographic primitives. There's the idea of like public private keys and hashing. They're cornerstones of cryptography, but you need to understand them. But then the distributed systems angle comes into it as well, because you have these blockchain platforms are made up of decentralized nodes running around the world. And so it's not necessarily trivial to convey information around them in the same way it is if you've just got one computer talking to another. And so that sort of means that there's certain barriers to entry in terms of understanding what's happening on the blockchain part versus the traditional application. And then in addition to that, you have the languages themselves that are used for writing these smart contracts too, which are really, you can think of it as business logic that lives on a decentralized network. I know I've thrown like a number of different things here, but I think the key point is for technologists anyway, there's understanding cryptography, understanding distributed systems, and having at least a rudimentary knowledge of these concepts. And then for the specific blockchain platform that you're working with, you need to understand what the integration points look like, how you write the logic that resides on the blockchain, which is using a language called Solidity in the case of Ethereum, but in other blockchains it can be other languages there. So Web3J, the library, makes it as simple as possible to do that for a Java developer, and it provides an entry point for it, but you still need to get your head around certain concepts like public key cryptography and hashing and so on to make sense of what's happening there.
Milan, that's a great question. Thanks very much. Another question from Daniel. I have a question about digital identity. Where do you see blockchain and identity going? Do you think it will be ERC 725 augmented with self-sovereign identity, another standard we have currently, or currently not possible and waiting for proper zero knowledge proofs, or perhaps something else?
So with respect to decentralized identity, this is another really hot topic with regards to blockchain and Web3 technology, because right now, when you think about your online identity, it tends to exist as either an email address and a password, which you create on a website, or it's a social login using Google, Facebook, Twitter, LinkedIn, or whatever else. And The big criticism of these approaches, one is that an email and password does feel quite archaic given how long we've been doing that for. And then with the kind of social logins, the criticism, of course, is that, well, this enables the providers of those services to see all the different online services that you're using, because you're using their infrastructure to sign into these and sign up for these other products and services with other vendors there. And not only is that you're giving a lot of information available, making a lot of information available that these companies have found very smart ways to monetize, especially in the case of Facebook. There's also the privacy angle too, in terms of they know an awful lot about what your online habits look like, in the same way that sometimes you might be on a site and you see targeted advertising and you're thinking, how on earth do they know to target me with that advert? It's not random. And so this is the idea of decentralized identity is kind of a key tenet of this, where instead of having to rely on these centralized services, what you have is a company or a trusted entity. So it could be a government, for instance, a government entity. They issue an academic institution, and actually I'll give the academic institution one because it's quite straightforward, I think, to follow. But if say someone does a degree at an academic institution, in order to prove that you've done that, right now people will get a certificate, and that university has a record that they can verify. If someone phones up to say, hey, we see this person studied there, is that true? And someone can say yes, or maybe they can email to attest to it. With decentralized identity, what that university would do is say Alex would go and say, yeah, I've done my degree with you. And what they would do, they would issue what's called a credential that basically says that the person with the identity that Alex gives us has completed this degree. And the thing is, though, is that the identity that Alex provides there, it's not like all his details. It's more that Alex says, hey, here's my public-private key pair, or maybe present it as a digital wallet, and they will say that someone with this identity created this, has got this degree here, and then that credential is something that Alex can then show to other people, and they can verify against the issuing institution. So it's all. It's hard to sort of explain it simply, but the point is it enables you to prove that you have a degree with an organization, and you can do that without having to reveal necessarily who you are to the person who wants to see it. And so it's quite groundbreaking in terms of this approach, because it gets rid of all the conventional things. Tying this back, though, to the question, the view is that with blockchain technology anyway, the intent is that people can have details of, the academic institution. It could have a key associated with its organization that lives on top of the blockchain, which is then used to subsequently prove that they are who they say they are, or you could have a link to your identity there. And with things like this ERC 725 that's mentioned here, the thought is that there's ways of encoding this in smart contracts. But I think, to answer the question more specifically, I think that I don't think ERC 725 will be the standard on its own, because I think off the top of my head that's fairly heavyweight, because it requires a lot of smart contracts for identities. I think it's more likely it's going to be less of it's going to live on the blockchain, so to speak. I hope that makes sense to people.
Thanks very much, Daniel. If anyone else has a final question for Conor.
Yeah, I'd like to say that game theory is all about players, outcomes, and strategies. Within traditional finance, it's very easy to measure success with the base asset of US dollars. Dollar go up, I'm doing well. Conor, how do you measure objectively success within the decentralized economic system?
I think there's lots of different ways you can look at it. If you want to look at it from a purely idealistic decentralized perspective, it comes down to, well, how decentralized is this protocol? And this is something this whole narrative is playing out very actively at the moment, because you have the Ethereum network and the Bitcoin network that are very decentralized in their nature, because they weren't, although they were the Bitcoin network never received any funding to get going. The Ethereum network did receive some funding, but it was open to anyone, whereas a number of subsequent blockchains that have emerged have received a lot of funding from venture capital firms in order to get them off the ground, and they create tokens with those. And then, of course, from the perspective of a VC firm, it enables them to get to a liquidity event far faster than they would have with more traditional investments, because of these blockchain protocols have tokens native to them. So as soon as those tokens are native, then there's potential exits there. And so as a result of that, what you see is what could be considered a success metric associated with these blockchain networks, which is the perceived value of their networks, which is typically captured in the form of how valuable their token is and what the market capitalization is of it. And if you head to CoinMarketCap, for instance, you can see a list of this. And so it just depends on what your reference point is. But I think if you're going to be, take the most altruistic perspective, it's going to be how decentralized this network is. Where are all of the nodes running? Are they in diverse geographic locations? Are they running on lots of different specification hardware as well? Or are there barriers to entry to actually run the hardware because of the cost there? Those, I think, would be the most altruistic ways of looking at it. But then if you want to sort of, measure it in a way that is compatible with, I guess, more traditional, capitalist type structures, it's going to be, well, what's the perceived value of the network from a monetary perspective?
So you gave a very industry protocol heavy answer. Thank you. That's very useful. I agree that decentralization is one of the most important factors for any project moving forward. But I'm asking also from an individualistic standpoint. So you mentioned perceived value, or how are you perceiving this value? Is it remained in US dollars? Is it Bitcoin? Is it Ethereum heavily for you? How are you measuring yourself as an individual actor within the decentralized crypto economy?
I wouldn't say that I do measure myself against it as such. I go with what interests me, and I do, of course, look at it from the perspective of how my business is doing as well, in terms of just looking at what our revenue figures are like, what the EBITDA is, for instance, from what one year to the next. If you, though, want to sort of move away from the lower level sides in terms of the token economic side, I think where you can start to think about impact is when it comes to governance of these blockchain protocols, because the key idea is something that I touched on earlier on, was that with Web3, it doesn't enable you just to read or write, but it also enables you to own part of the protocols. And there was a famous piece, I think it came out of Union Square Ventures a number of years ago, talking about fat protocols with that respect, because you can actually imagine if the internet in its current form had a token associated with it, it would be very different to where it is now, because the people who created the internet would be the ones who had done best financially out of it, as opposed to the significant web companies. And so with Web3, there's the potential for an alternative approach there, but I think the key enabler there is governance, because people are incentivized to participate in the communities via these tokens that are associated with, be it the project or the underlying blockchain protocol itself. And so when you want to measure the success of those, it really comes down to, well, how efficient is the actual governance process? And in the same way that you'd look at an electorate, you'd look at how many people are actively engaging in the discussions associated with the governance. When it comes to voting, how many of the available token holders are actually, casting their votes? Is there delegated voting there, for instance, in order to improve it? And so these are just some of the different considerations, but we are very early in this space as well, though. So it's going to get fleshed out more, but you certainly have those core kind of building blocks that can be considered measures of success in this space.
Great.
I've got a question. Hey, Conor.
Go for it, Josh.
Congratulations.
Hey, Josh, how you doing?
Actually leads on well from your last question. I'm just wondering, with some of the real or imagined contention around elections recently. Have you seen any applications? I know there was a company, HST, out of Australia in the last kind of crypto boom in 2017, looking at trying to fix voting. I mean, it seems like a perfect application, but have you seen anything there, or do you see any future there of moving, I guess, elections and voting into the blockchain space?
There definitely is, on the surface anyway, like a really good opportunity there. And I think that there's a couple of barriers though to it. One of them, of course, is that you need to have a platform that makes it straightforward for people to engage with. And if you have lots of different vendors doing different approaches, you end something that's not really using blockchain as such, although it might be using it behind the scenes. It's got to be quite a standardized platform places to really get the most value out of it, or serving very significant numbers of people. So that's about the maturation of the underlying technology itself, and getting to a point where people are comfortable engaging with it, say via a wallet on their phones or whatever else. But then the other part though is, of course, the legislative side of it as well, because it's not always that straightforward. It's like in the US, for instance, the challenges with where they can actually create sites for actually for capturing people's votes and so on. There's a lot of very old legislation there which actually restricts what's possible with respect to changing these things. And as with all of this, it's about whether you can get the legislation to get updated in a timely enough way to actually be able to make use of the technology. And given what's at stake with voting, and that it can be very divisive as well, how innovative people want to be with that, depending on what their areas of focus are and what sort of electorate they're representing. It's probably going to take time.
Thank you.
Fantastic. And if anyone has just thought of a question, we can always send them in, and I'm sure Conor will respond on email to you later.